The Los Angeles skyline can be seen from Stephen Chung's office, but something is missing, and what he is not seeing worries him.
The skylines are no longer filled with cranes or supplied by Chinese investments coming over here. What we're worried about are the construction that's already here that cannot be finished because of the financing situation.
Chung says one example of this is the billion-dollar Oceanwide Plaza, located in a prized location near the Los Angeles Convention Center and the complex where the Lakers and Clippers play basketball. Work stalled in January for this condo, hotel, and retail space, and Chung has seen very little activity since then.
In terms of people moving to that location and actually the retail activity that's going to be there, that's revenue that we will not be getting as soon as we hope.
The standstill at Oceanwide Plaza is but one sign of a sharp drop in capital flowing from China at a time of heightened tensions between the two superpowers. Overall direct foreign investment between China and the U.S. peaked in 2016 to a record $60 billion, then dropped drastically, according to the Rhodium Group. One reason is a change in China's monetary policy, says Los Angeles-based land use lawyer Dale Goldsmith.
There were the currency controls out of China where a lot of companies were parking money, I think it was probably to get money out of China and into a safe investment. And at the end of the day, the Chinese cracked down on that.
Another reason is increased vigilance by a federal watchdog organization, the Committee on Foreign Investment in the United States. The Rhodium Group estimates the committee's scrutiny has led Chinese investors to abandon more than $2.5 billion in U.S. deals. A relatively strong U.S. economy is another factor.
The dollar has been very strong, making investment a lot less attractive for the Chinese in the States. On top of it, you'd have skyrocketing construction costs.
To top it all off, a trade war persists between the U.S. and China, sowing uncertainty in an already challenging investment climate.
Part of the reason why we're seeing really not any new projects coming from China is because of the China trade war, not knowing the future. And as the tensions escalating, I think a lot of the Chinese companies are wary in terms of whether they should enter the U.S. market.
The trade war is creating another trend. To avoid high tariffs, international companies are moving manufacturing out of China and into Southeast Asian countries. In some countries, it's creating new wealth. Others are trying to increase their direct foreign investment to offset the trade war's negative effects in their own countries.
Specifically Vietnam and Indonesia. Over the past few years, they've been a lot more active seeking for business opportunities.
So long as economic tensions remain high between Washington and Beijing, Los Angeles and other U.S. cities will have to look elsewhere for investment capital. Elizabeth Lee, VOA News, Los Angeles.